Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 6 trade ideas to share with you towards the end of the video, so stay tuned. So jumping right into our S&P analysis, starting off with our sectors as we always do. Who was leading, who was losing, and where was the weight? Certainly the energy sector led the pack today, up about 3.5%, whereas utilities were at the bottom of the barrel, down 1.1. Neither of those sectors make up a huge weight, so what does? Certainly the XLK for the tech sector, the heaviest weighted sector, up 1%. The financial sector, second heaviest weight, up 1 3/4, and healthcare down here, pretty much flat, but up 16 basis points. So overwhelmingly green day across our sectors, and again, no surprise to see that the broad market is green when you have something like that happening. Let's check in on these charts and make sure risk isn't mounting in one place versus another. I would say XLK looks phenomenal, right? We saw that pullback into this prior gap fill area that we've discussed now for, 2 or 3 weeks at least, at 148, and we did form this daily higher low. So the question now has to be, do we form a new higher high? In which case, it's now affording us the opportunity for another pullback for a new daily higher low. So no risk really mounting here in the XLK. Chart looks phenomenal. We'll move over to our XLF now for financials, and this one's more of a question mark, right? We talked about this acting as a magnet in the past, and 3661 is exactly where we closed in today's session. So because of that, we can't say definitively whether or not we go higher or lower from here. So not knowing is just the risk of the unknown. So XLF is posing a little bit of risk, again, just not knowing which way it's going to go right now. Obviously, if it's higher, we're looking at 37 as an area of resistance, and if it breaks, you're just trading up towards, right, the top end of this range. So for now, it's an unknown, right? And that's all I can kind of leave it at. I would say if we do move lower though, I wouldn't be, overly concerned with a nasty move like this, simply because we had a low in here. We tried to form a new lower low, but it got bought right back up, right? So I don't really think the sellers have what it takes to really see massive follow through underneath this 35.19 just yet. So really keeping a close eye on XLF at the 36.61 for now. While we're on the topic of financials, let's go over to our TNX. We're doing these in order finally. And TNX, obviously huge rollover here in terms of the overall trend, but slightly ticking up into the mid part of the week, right? So overall, the trend is down, and that's, again, if you just think about this logically, why in the XLF we see more of a lower high, right? This is an LH, as opposed to in tech, if we just go back over to our XLK, we certainly got our higher low, right? So that's sort of the push and pull that we talk about between tech and financials, and it's really driven by rates. So if we go back over to TNX, as this has sort of fallen out of bed, if you will, that's not going to bode well for financials, but it's going to do better for tech, which again is what we just sort of described and illustrated there with the lower high versus the higher low on the daily time frame. So for now, keeping a close eye on what happens around 1.3 or 13 here in the TNX. If we go higher, the next area to watch out for is 1.4 and obviously 1.5 after that. This is really the major one to watch out for, but as the chart currently sits, because we're in an overwhelming downslope out of this prior range, I wouldn't be overly aggressive in the TNX in the hopes that it comes back up and really saves the day for the financials. Next up, let's take a look at our XLV to wrap up our sectors, and then we'll talk about volatility in just a moment. This one looks phenomenal, right? If we do something like this, what you'll notice is the support trend line held to a T. We did put in a flat area of highs, so now pressure cooker top here over about 129.50. If we take it out, just watch for blue sky territories, $1.50 intraday levels that do form, and this could help the S&Ps really power higher, right? This is the third heaviest weighted sector in the S&Ps, so don't just write it off as not being tech or financials, right? So this could help us continue the daily uptrend in the S&Ps as a whole. Let's now take a look at volatility, moving over to the VIX, and I think this is a deceiving story here, which we're going to dive into a little bit. We sort of did in last week's video, right? So VIX certainly exploded over that 2050 mark on Monday and has since fallen back into the range. So you might think, wow, okay, that's it. That's the end of the move. Volatility is kind of gone for now. Well, not so fast, right? In last week's video, we looked at the VVIX, okay? And this is volatility of the volatility index. And what I pointed out in last week's video is that volatility here and volatility here were relatively the same, even though what we saw in the S&Ps was not the same. So just to sort of give you an idea of what this level is, let's call it 120. Still note that the volatility of the volatility index is above 120. So although it looks like the VIX is pulling in, right? So VIX, back over to this chart, sure, it's pulling back in under 2050. Things are all fine and dandy. The market is just going to float on up to all-time highs. Now, it certainly could, but it's going to do it with high volatility because, again, the VVIX is still reading at elevated levels over that 120. Let's move over to the S&P now and talk about levels to watch into the end of the week. What I want to do is walk through how I would repair this chart, as if we weren't doing this together. So let's do it together so you can see into my brain kind of and how I look at these things once structure has been repaired. Obviously, massive gap lower on Monday. It's since filled. We don't need to mark that off, but we did fill this gap underneath, so that's no longer in play. We'll just simply remove that. We did hold on to the 50 SMA, but we sort of violated this white line. And what I think is important is the low of this overall downturn. We'll talk about why when we get to the market profile in just a moment. The other area I still think is important is this prior pivot high, but more importantly, sort of the pullback area here from what happened on Tuesday. And again, we'll talk about why when we get to the market profile in just a moment. This level, not so important anymore. We will remove. That was just 2-day balance lows and respected here. We just powered right up through it. So not really a huge level to watch going forward. Same thing here with 128.74. Not as important. Prior 2-day balance highs was respected on the open there. So we'll just remove that and leave everything else on the chart. Obviously, the support trend line is still intact that we did, rebound back above and close strong back above now. The first thought would be, now that we've done that, we've seen the pullback. We were talking about buying pullbacks for quite some time inside of the weekly watch list videos. The question now is, do we make a new higher high, or do we pull back, form some sort of daily higher low, and then make the new higher high? That is the bull case here inside of the S&Ps, and the first level to keep in mind is 435 the whole dollar. After that, double top here, poor high, if you will, at 438 the whole dollar, blue sky levels over that, right? So there is the possibility that that happens into the end of the week, but what I think is probably more likely is some sideways cooling off after we've seen this volatility. Now, once we get maybe a day or two of consolidation, I think it's back off to the races because, again, remember, the VVIX is still elevated, volatility is still high, and all that means, it doesn't mean crash per se. Just because the VIX is up, it doesn't mean crash. It simply means the ranges are going to be larger. So move your targets higher and make your stop losses looser. Be prepared for that larger movement in net move, whether it's to a take profit or to a stop loss one way or another. So all of that being said, targets above we just laid out. To the downside, we would want to see this hold here at 431.70. There is going to be an area of single prints in here, which we'll pick out from the market profile in just a moment. And then I think the critical level to be holding after that is really this 424.90, call it 425 the whole dollar, and the 50 SMA as that slowly creeps up and finds super support here. Those are the levels I'm watching out into the end of the week. For now, let's take a look at our market internals. If you're not familiar with this screen, get familiar. Top right-hand corner is going to tell you what this is, what it all means, and how you can set it up to make better trading decisions intraday. Obviously, we always talk about the 300,000 mark, or 300 million mark, in the volume reads, and we easily breached that on Monday as well as on Tuesday, getting close to those minus and plus 600 million marks. So don't think that what happened on Monday and Tuesday is just, low liquidity in the market, summer trading, the market's just all over the place. No, there was some serious volume flowing across the market, and this is proof of that. The other thing we can look at here is the ADDs, certainly trending to the downside, trending to the upside. Those cancel each other out, and we're left with this here on Wednesday, essentially, back to where we were headed into the week, and we saw trend day higher. So it certainly is, a correlation that stocks are moving higher across the broad market. The other thing we can do, again, this is more for intraday reads, but if we're just looking at it in hindsight, tick read down here and tick read up here, what do? Just like our ADDs, they cancel each other out. And what I do think you can read into is, although we had a certainly, trending day higher during today's session, the tick read is, extremely flat, especially on the tailwind of a very, very strong cumulative read. So that to me was a little bit interesting. Again, it's not, I'm not trying to say that the market has to collapse. There's a huge divergence here, but it's something to pay attention to, that most of the stocks on the New York Stock Exchange were flat today, right? It's a mixed bag of what was ticking up versus what was ticking down. Let's move over to our market profile now. We did do a tutorial on how to use this on Monday, so definitely check it out if you have not watched it already. It'll tell you what market profile is all about and why you really should be using it. It'll also just help you make sense of these videos here. So the reason we pointed out that the low of the day on Monday was important is because here, poor low, right? That's something that you carry forward. If it's ever retested again in the future, it should break just because it's a structural deficiency. The next thing to point out is the single prints that we left in our wake on Tuesday. And again, what type of day is this? If you watch the video, you should know how to answer this. This is a P-shaped day, which is indicative of short covering. So where are our single prints? If we just hover the cursor, it's about 42.83, and that'll sort of equate, if we just go back over to our S&Ps, to about 428.30. So mapping this out in here, 428.30, where are you? That is close enough. I'll be watching the market profile intraday, but do know that there are single prints underneath here, in which case we go to our next target. Again, why did we leave this here at around 425? Let's go back over to the market profile. What do you notice about this A period, right? If you watched the market profile video, you'll know that A kind of lines up with this here, which was also what? Right? It was the value area high. We had this here, which was the overnight low. So it's a mechanical or weak low. It's not a poor low, but it's a weak low, which again, if revisited, should break and take us to our next level down here. We talked about the single prints there. We talked about the P-shaped profile. And today we were left with a rather balanced or normal day. That being said, where did we go to in terms of target? Boom, right to this point of control from in the past. It's the highest volume node on this market profile from in here. So it's no wonder we kind of balanced out there after the market was in such an upheaval of trying to move away from value and then, magneted right back to where value was. So as we head into the end of the week, what are we watching out for? Those key levels that we just discussed and sort of translated over to our S&P chart. Obviously, we got our single prints. We talked about this weak low, and then we talked about the poor low all the way down here. Let's move on and wrap this up with our QQQ and IWM. Obviously, this is going to look like our XLK. Held on to this area as a daily higher low. Support trend line has broken, so we will remove that. We will also get rid of, actually, I kind of like what's going on here. This is going to equate to the low end of the rally, obviously filled the gap, and now our next area of resistance is at 362.67 if we take it out. Obviously, looking for a new all-time high to be set because that's the next thing that you would do in a daily uptrend, right? You're looking for higher highs and higher lows. We just fulfilled the requirement of a potential higher low here, and now we want to see, do we make a higher high? So that's on the radar for the Qs. Now, the IWM is a little bit more of a different story. Remember that we treat this as more of a gauge for risk on, risk off when we're dealing with it just chopping around in a range and not really telling us much about the market. What do we also know about trading in the middle of the range? It's never advised that you initiate a new position here. Certainly initiate towards the edges of this box and target back towards the middle because that's how you play balance. But as you're in the middle, you don't try to anticipate the move to the top end or back to the low end. As the chart currently sits, if you do feel like you want to trade it, obviously your targets above would be 227, all-time highs after that. If we roll back over, 215, and the bottom end of the range closer to 208. But as it currently sits, it's more of just a neutral indicator in terms of what's going on in the overall market. Let's get into these trade ideas now. The first one is on DK, not DN, but DKNG, if I could spell here, my goodness. There we go. DKNG is up on the screen, and what we're looking at is this resistance trend line and what we sort of did today. So they're getting into the NFT space. Again, I'm not a huge fundamental trader, but what I am is someone who tries to take advantage of opportunity. And because, NFTs were huge and it's huge in the sports card and digital sports asset sort of class, if you will, I do think this has a little bit of room to run into the resistance trend line, in which case we're going to monitor very closely to see if we get a pullback for a higher low and then break it on the next attempt in DraftKings. Obviously, targets would be horizontal levels. You're just going to walk them back up. So 52.78, that's going to coincide with your 200 SMA. And then after that, right around 55, or let's just call it 56, the whole dollar. Next trade idea is going to be on JPM for JP Morgan. This is a longer term thought, but something I noticed today. And again, that paired with sort of weak financials, if you will, this is certainly a candidate to keep on a watch list. What pattern did I just draw in? Obviously a head and shoulders. Where's your neckline? Right down here, around 148, the whole dollar. If it really breaks down and gets going, I do think it could see the 200 SMA, the green line here. Earnings are in the past, so feel free to attack this one with options. I wouldn't be interested if we start to get acceptance over this 157, whole dollar and 50 SMA, or just the right shoulder of the pattern. Next up, we have J&J, and this is going to be in our healthcare space. So obviously that pattern in the XLV is going to bode well for this setup here. What I like about it is that we have sort of this rising support trend line, horizontal area of resistance. If we can take out this high around 172, let's just map that out with an official level. So 171.60, it looks like, is the number to beat. If we can take it out, looking for blue sky levels, whole and half dollars, intraday levels that do form. I wouldn't really be interested in trading this one if it did something like this, fake break up and out, and again, paired with maybe the XLV seeing a fake break as well. That would be your signal to just stop out, and maybe this sees more chop as opposed to upward trend. If you really want to wait for a more risk-friendly entry, you would just wait to see if you can get a pullback into the support trend line, enter there, and then place your stop loss just underneath, hoping that you get something like this into the future. So J&J certainly on the radar for a break break over 171.60. Next up, we have CVS. And again, this is sort of in that healthcare space. And what I like about it is that we have a double top or double bottom, wrong way, double bottom. And we did break and close above the neckline in today's trading session. The target here is right up around our 50 SMA, around 84.50, we'll call it. So any moves over today's high, just looking for something like that into the end of the week, would not be interested if we trade underneath this 82.50 neckline breakout area. Keep in mind, earnings are a little ways, but kind of around the corner here if you decide to take some longer dated options in CVS. Next up, we have ATVI. If we could get the A in there, ATVI, there we go. And this is, again, sort of a longer term pattern, but something to monitor here. We do something like this, you can see flat lows developing. And if we do something like this, you can just see that lower highs are certainly developing as well. So keep a close eye on 88.50. If we can break it down, there is some serious room to fall, I think, just because of how, emotional this up sort of melt up was really in the past. So because of that, target below is going to be here around, if we could get a click, there we go, at 82.39 on the breakdown inside of Activision. Next up, we will take a quick peek at NKE, and then we'll leave you off and send you off for your Wednesday afternoon. This one is very interesting to me because of what happened on Monday, right? Obviously, the market suffered from a massive gap down, and this did too, right? That's not a trivial gap there. But what we did was just move right back up towards the highs, and we never even came close to this massive earnings gap up here. So I like the relative strength that it's exhibiting towards the market. If we can really get going over the set of highs in here around 162 quarter, 163, if you really want to be a stickler for that high in there, then you're just looking for blue sky levels, whole and half dollars, intraday levels that do form. I think it's blue sky levels. Let's actually scroll back here, scrunch this up a bit. Yeah, certainly blue sky levels. There we go. Would not be interested in the trade if we were to come back down and violate this sort of double bottom low we put in at 156.50. So hopefully that was helpful. 6 things to be watching for medium to longer time frame trades, really. There's really not anything that I saw that's like, yes, I want to jump on this tomorrow. So again, if you enjoyed the video or learned anything new, let me know in the comment section or by simply leaving the video a thumbs up. And with that being said, I wish you all a green trading week.